Hello, I'm Dianna Howell with the Howell Group, and today I have Zell Railey with Weber Mortgage with me, and we are going to go through the steps of taking a loan. So Zell, go ahead and tell us the process.
Thank you for having me. So just in a brief synopsis of how financing works to get a loan. The first step is to give me a call, obviously.
Yes.
But the first gateway that we have to go through is taking a look at your credit. A little bit of information I have to get in order to pull your credit, and obviously your authorization. But then I'm going to look at what's actually on your credit. A lot of people don't know. They just say, hey, what's my credit score?
Right.
A credit score is nothing more than a numerical representation of what's actually on your credit report. It'll have all of your loans, credit cards, mortgages, anything like that that's going to be reported to one of the 3 bureaus is going to be on your credit.
Okay.
Basically what we're looking for is, do you pay your bills?
Right.
That's the bottom line.
Right.
Do you have credit, and can you manage it effectively? Do you pay your bills? So we're looking for late payments. Are your credit cards maxed out? Things like that. Late payments are the biggest. They're going to be the most detrimental to you. But we look at everything on your credit score, everything on your report, not just your credit score. And then that's really the first gateway. Once we're past that, and I don't see anything that's going to keep you out of the house based on your credit report, then what I do is I can issue what's called a pre-approval letter.
Okay.
It's and I'll actually send it to you as their agent.
Right.
And it'll say, Mary Smith is pre-approved to buy a house up to $200,000.
Okay. Which I can say in today's market, because we're in low inventory, we're seeing multiple offers. Having all your ducks in a row before you put an offer in on a house is extremely important. So as a real estate agent, I'm going to ask my buyers to get pre-approved, and that's where they're going to talk to a lender, as Zell, and they're going to go through the process about him pulling their credit, checking to see what they can get pre-approved for, so we have that letter in hand on any offers that are made. And that lets the seller know that you can actually purchase a home.
Yes.
You have that purchasing power. So pre-approvals are very important right now.
And it gives you a heads up over,
Right.
or a leg up over someone that doesn't have that.
So besides a conversation with someone, what else are you going to require?
The next step is I have to collect the income documents that we're going to need to prove what you've told me.
Okay.
W-2s, pay stubs, in certain circumstances, taxes. Basically anything on paper that's a legal document that says, yes, I do make this and I have been making it for the past 2, 3, 4, 5 years.
Okay.
Once I have all of that, we combine all that and we're going to send it to the underwriter. The underwriter is the one that does the deep dive and says, yes, this person is financially sound and we feel okay lending them several $100,000s to buy a house.
Okay. So ultimately, it's the underwriter's decision.
It is. It is. Everyone talks about the loan officers, but we are just the gatekeepers.
Right.
We're the ones that talk to the public. We're the smiling faces, and we're the ones that look at the initial file. And if we do our jobs correctly, you're not going to have any problems. But yes, it is the underwriter's call as to whether you get a house or not.
So I always like to tell my clients, the underwriter is the person with the microscope, checking everything out, all the little details to make sure they all add up.
They do that, absolutely.
Okay. And so there are some third-party items you'll need once someone goes under contract. So what are the third parties?
Some of the things that we're going to ask our borrowers to go and look for is homeowners insurance.
Right.
That is very crucial. We're not going to let them buy a house without having homeowners insurance.
Okay, so that's required.
It's required. I am going to require that before you can purchase the home.
Okay.
And homeowners insurance can be up to, in certain circumstances, 20% of your total monthly payment. So it does pay to shop around and see what kind of coverage and what kind of premium you can get. Some of the other things are, as you'd be familiar with from the real estate side, a termite bond. Termite bonds and wood infestation reports. Those are going to be mandatory on government loans, highly encouraged on conventional, but not actually mandatory. But in Alabama, you need a termite bond.
Yes, all the woods, right?
Yes, all the wood. So those are just some of the things that you're going to have to think about as a prospective new homeowner going to get. But again, that's why they have people like you and like me to help them.
To help guide them through the process.
Exactly.
Right. So they're also going to need an appraisal. So tell us a little bit about the appraisal process.
The appraisal process is, the appraiser goes out and will do an appraisal on a home to determine its value. Now, we are only allowed to lend up to a certain percentage on the value of the home.
Okay. Who does the appraiser represent?
The appraiser represents me as the lender.
The lender.
That's,
Not the buyer, not the seller, not the agent.
A lot of people get confused that an appraiser is not a home inspector.
Right.
They do overlap a little bit, but the appraiser represents me as the lender. He's saying, yes, this house is worth $200,000.
So he's putting the dollar value on that home.
He is.
Okay.
And he gives that to us, and that's what we base all of our numbers on once we get that back.
Okay. And anything else that you're going to require at that point?
I think that's about it. So,
and of course, different loans have different down payments.
Yes. A lot of people are still under the false impression that you have to have 20% down, which you do not. Conventionally, you can go all the way down to 3% down payment. Traditionally, we see 5, 10, and 20, but we do have programs that allow people to put down 3% on conventional. FHA is going to be 3.5%, and of course, for our veterans out there that are using their VA benefits, it's a zero down program.
Which is great.
So it's fantastic.
Which is great.
But yes, on a conventional loan, you do not need 20% down, which a lot of people still think they do.
Okay. All right. So the first step they do before they go shopping for a home is they need to talk to a lender.
Give me a call.
And, yes, give Zell a call, get pre-approved, and then give you all your supporting documents. Correct. You're going to put them through underwriting. I'm going to work on finding the home, getting them under contract, and then that starts the process.
Yes.
Okay.
That is correct.
Right. So if you have any questions about getting a loan or what type of loan you can qualify for, give Zell a call. His contact information is below. I'm Dianna Howell with the Howell Group, and thank you for watching.